tariffs, there's been a lot of on and off, some inconsistency.
There's no inconsistency. I'm not like a block that just, I won't delay. It's called flexibility. It's not called inconsistency. It's called flexibility.
Recently, Canada has managed to pull off a real economic maneuver that has shaken trade ties with the US. Imagine that the US is one of the most powerful economies in the world, and against the backdrop of a large-scale trade war with Mexico and Canada, which has already led to higher tariffs, Canada, seemingly under pressure, has made an unexpected and decisive move. President Trump, who has been pushing hard for high tariffs on Canadian aluminum and steel, is imposing new sanctions on his neighbors. The tariffs are as high as 50%, which is not just a blow to Canada, but a sign that trade relations between the countries will never be the same again.
After Trump imposed those sweeping 25% tariffs on aluminum and steel imports, the European Union retaliating with tariffs on up to $28 billion of U.S. goods. Trump making it clear this isn't over, vowing to respond in kind with sweeping retaliatory tariffs early next month.
But here's what happens next. Canada isn't just taking the hits, it's fighting back. Over the course of several months, the countries engage in a series of sharp economic countermeasures. In response to increased tariffs on Canadian cars, Canada introduces a 10% tax on energy exports. And that's just the beginning. Canadian companies begin to change their focus and look for new partners in Asia, confidently rebuilding their economic ties.
Ready? The higher the tariff, the more likely it is that the company will come into the United States and build a factory in the United States so it doesn't have to pay the tariff.
That will take many, as you know, that will take many years.
In fact, I'll tell you, there's another theory is that the tariff, you make it so high, so horrible, so obnoxious that they'll come right away. When I do the 10%, 10% is really, first of all, 10% when you collect it is hundreds of billions of dollars. The numbers that you're talking, all reducing our deficit. But really, so there's two ways of looking at a tariff. You can do it as a money-making instrument, or you can do it as something to get the companies. Now, if you want the companies to come in.
But this is only the surface. Canada's approach turned out to be much more cunning than anyone could have imagined. And while America is preoccupied with fighting for its trade interests, Canada is forming a strategic partnership with Indonesia, eliminating nearly 90% of tariffs on goods. As a result of this agreement, Canada is significantly increasing foreign investment, while the US is watching its competitor grow stronger on the international stage. According to recent studies, foreign direct investment in Canada has increased by 9%, while in the US it has fallen by 28%. This is not just a setback, it is a real economic paradox.
With Elon Musk's views on weighing into very much national politics, national elections in Europe. And then on top of that, when you see the backdrop of Tesla upgrading its product line and the impact of them trying to chase more sales at the back end of last year, that means it's short on inventory. It can't necessarily sell as many vehicles or doesn't have as many in stock to sell. So there is that issue there of a confluence of impacts, which means that sales have been falling. Again, the question is how much more that will impact into February as well, given that the back end of last year, in 2024, Tesla sales did slip overall.
What does this mean for the US? It means that Canada has not only managed to withstand trade blows, but also to benefit by forging new global alliances and strengthening its position on the international stage. Canada has embarked on a path of high-level diplomacy, deepening ties with the EU, Japan, Australia, and India, thereby positioning itself as an economy based on strict rules and stability. Canadian companies are adapting. They are reducing sales in the US and opening new offices in other countries. More and more are turning away from trade with the US, and the world is beginning to take notice of a country that has managed to withstand a brutal economic war. But what will happen next? The US will find itself isolated if it does not restore predictability to its trade relations. Canada's strategy is not just a response, but a carefully thought-out plan aimed at strengthening its position on the world stage in the long term.
And police in Italy are investigating possible arson after a fire destroyed more than a dozen Tesla vehicles. Elon Musk is calling the incident at a Rome dealership terrorism. This comes as Tesla has been the target of recent protests around the world.
In this video, we will explain in detail how Canada not only survived the trade war but also reached new economic heights. Subscribe to our channel to find out how this game could change the future of trade relations around the world. In early 2024, the trade war between the US and Canada entered a new phase when President Donald Trump decided to increase economic pressure on his northern neighbors. Against the backdrop of existing trade disputes, such as tariffs on steel and aluminum, Trump initiated a series of new economic measures that further exacerbated tensions. The first decision that caused particular concern was the introduction of a 25% tariff on Canadian aluminum and steel. This was one of the most radical steps in the Trump administration's economic policy and marked the moment when the trade war officially entered a new, more dangerous phase. Tensions were mounting, and all eyes were on how Canada would respond to this move.
We begin with the president's trade war escalating tonight. This evening, the retaliation against the United States, Canada, and the European Union responding quickly, just hours after President Trump's 25% tariff on all steel and aluminum coming into the United States. Canada, the largest supplier of steel to the U.S., slapping new tariffs on $20 billion worth of U.S. goods that are sold in Canada. And the 27 countries of the European Union imposing retaliatory tariffs on up to $28 billion worth of U.S. goods sold in Europe.
However, as it turned out, this was only the beginning. A few months later, when the situation seemed impossible to complicate further, Trump not only maintained the existing tariffs, but also increased them to 50%. This move came as a real shock to the Canadian authorities, as well as to global economists, who until then had believed that such tariffs would be impossible in principle. The tariff increase had far-reaching consequences, not only for the Canadian economy but also for the entire international market. Relations between countries that had historically been closely linked and were also part of the North American Free Trade Agreement, and NAFTA, were threatened.
That's a 10. That's a good one.
The escalation of the trade war had not only economic but also political consequences. For Trump, this move was part of his election campaign aimed at attracting voters interested in protecting American jobs and strengthening the U.S. position on the international stage. However, for Canada, it was a real test. First and foremost, it hit the aluminum and steel industries, on which a significant part of the Canadian economy depended. The country's authorities were faced with a choice: accept harsh conditions or look for ways to reduce their dependence on the U.S. market. Canada, meanwhile, began actively seeking opportunities to diversify its trade. In response to the new tariffs, the Canadian government took a number of steps aimed at finding new economic allies and partners. Against this backdrop, it became clear that Canada, despite its historical dependence on the U.S., would no longer wait for America to restore trust and fairness in trade relations. The first retaliatory measure taken was to increase taxes on energy exports to the U.S. For decades, energy had been a key component of trade between the two countries, and this move could have a significant impact on U.S. interests, as the U.S. depended on Canadian oil and gas supplies. It was this move that symbolized Canada's readiness to respond to economic pressure. However, the most important factor was that Canada began to look for ways not only to protect itself, but also to find new markets for its goods and services. The Canadian authorities shifted their attention to Asia, and especially to China, which at that time was actively strengthening its economic ties with countries weakened by sanctions or conflicts with the U.S. This decision proved not only timely but also strategically sound, as it allowed Canada to reduce its dependence on the U.S. market and begin strengthening its position in the Asian region.
After weeks of whiplash, Trump threatening tariffs, imposing some, and walking back others, many Americans are feeling the uncertainty. In Swisher, Iowa, distillery owner Jeff Quint says it's paralyzing.
The bourbon industry is going to be collateral damage in this tariff war. I don't really think there's any way around that.
And he's not alone. Tonight, the majority of Americans, 61%, now say they disapprove of how the president is handling tariffs. 56% say they disapprove of his handling of the economy overall. But the president has dismissed those concerns tonight, saying he has the right to change course.
Despite tough economic measures, Canada faced several difficult issues. First and foremost, these were related to the domestic impact on the population, which was under pressure from rising prices for certain goods. Higher tariffs on Canadian cars and auto parts had a direct impact on the cost of living in both countries. In Canada, these measures affected the growing automotive sector, which had also become an important part of the country's economy. Some major Canadian automakers began to revise their production plans, and consumers faced sharp increases in car prices. However, an important point was that, despite these difficulties, Canada began to restructure its economy, focusing on other sectors such as high technology, innovative startups, and intellectual property. Canada demonstrated growth in these areas, attracting investors from Europe and Asia. This shift was the factor that allowed the country not only to survive the trade war, but also to strengthen its position on the world stage. Canada's strategy was not only to seek new partners, but also to establish a more flexible and diverse economic structure that could withstand any external shocks. Uncertainty and sharp changes in US policy also led large multinational companies to reconsider their plans. For example, many corporations began to abandon close cooperation with American companies in favor of less risky investments, which also played into Canada's hands. Foxconn and a number of semiconductor manufacturers began to change their plans for the future, reducing the risks associated with trade barriers and economic instability in the US.
US President Donald Trump has announced a 25% tariff on all car and light truck imports into the country. It's due to come into effect on April 2nd. Economists and world leaders are warning that it will be a tax on consumers and have a chilling effect on the global economy. But to Americans, Trump paints a rosy picture, predicting that the levies will spur growth.
These events also played an important role in restoring confidence in Canada on the world stage. Canada was able to demonstrate not only its readiness for economic resistance, but also its ability to adapt to new conditions. All this took place against the backdrop of the ongoing global economic crisis, when even the world's strongest economies began to lose their former positions. Thus, despite deteriorating relations with the US and increased tariffs on key goods, Canada was able to strengthen its position on the international stage by forging new alliances and expanding its economic horizons. Canada began to actively strengthen its position by focusing its efforts on expanding economic ties in Asia. This decision seemed to be not just a response to US actions, but a strategic shift that allowed Canada to significantly reduce its dependence on the American market. The partnership with Indonesia was one of the most important steps in this direction, as Canada signed a historic agreement that eliminated more than 90% of tariffs on goods. This agreement opened up new opportunities for Canadian companies and allowed them to significantly increase their trade with Indonesia. Moreover, despite initial doubts about the success of this partnership, the results exceeded all expectations. Canada, demonstrating flexibility, gradually shifted its economic efforts to East Asia, which allowed it to gain an advantageous position amid global economic instability. Within a few months of the agreement signing, Canadian investment in Indonesia grew by 13%. This was a significant achievement for the country, given the economic difficulties associated with the escalating trade war. But Canada did not stop there. In the same year, Canada stepped up its efforts in the Indo-Pacific region by attracting new foreign investment. This made Canada a more attractive partner for many Asian countries, which now saw Canada not only as a trading ally, but also as an important player in global economic processes. Canada increased its contribution to the development of technology and startups, which attracted the attention of investors, especially in countries such as Japan and South Korea. This in turn allowed Canada to establish long-term partnerships that were less susceptible to external political factors. The further strengthening of Canada's economy became evident when statistics showed that foreign direct investment in Canada increased by 9%. This was an incredible achievement, considering that in the US this figure fell by 28%. This figure received particular attention in the Canadian press, as it showed how Canada had been able to withstand the economic war and redirect its efforts to more stable and promising markets. For many Asian countries, Canada became a symbol of economic stability, as it demonstrated how it was possible to adapt to changing conditions without losing its strategic position. Meanwhile, the US continued to face the consequences of its trade sanctions. Countries that had previously relied on the US market began to look for more lucrative alternatives, which inevitably affected the US economy. Canada, on the other hand, continued to develop its foreign trade, building ties with countries such as India, Australia, and the European Union. This gave Canada the opportunity not only to strengthen its position on the world stage, but also to enter new markets that were not affected by US economic sanctions. This was an extremely important step because it allowed Canada to become not just a bystander, but an active participant in the creation of a new global economic system.
I think you're going to remember today, it's going to be a free nation that we're dealing with. We're going to have a very free and beautiful nation. It's going to be Liberation Day in America, and it's going to be a day that hopefully you're going to look back in years to come and you're going to say, you know, he was right. This has turned out to be one of the most important days in the history of our country.
However, in addition to this, Canada began to take concrete steps to reform its domestic economy. The response measures included not only the diversification of foreign trade, but also changes in the strategies of large Canadian companies. In particular, major automakers and petrochemical companies began to redistribute their production capacities to reduce their dependence on the US market. Some companies in the automotive industry moved their factories to Indonesia and other countries in Southeast Asia, which allowed them to minimize the risks associated with tariffs and economic instability in the US. This was a rather risky move, but it allowed Canada to strengthen its presence in new markets, while continuing to develop innovative technologies and improve its production capacity. One of the most striking examples of the success of this approach is Ecotech, a leader in sustainable technology. The company began to increase its market share in China and India by signing a $5 billion contract to supply environmentally friendly technologies. This decision was an important step in strengthening Canada's position as a technology leader in the global market, and demonstrated that Canada is ready to be not only a supplier of raw materials but also an innovator in new areas. Canada's response also included increased taxes on energy imports from the US. This decision sparked a wave of protests among American businessmen and politicians, but in Canada it was seen as a necessary measure to protect national interests. While the US continued to impose new tariffs on Canadian goods, Canada responded by increasing its revenues from trade with other countries. As the US's dependence on Canadian energy resources grew, Canada put pressure on the US, forcing it to seek more favorable terms for trade with its neighbors. Thus, gradually, Canada not only survived the economic war, but also found itself in an advantageous position. Its decisions to diversify trade, develop new economic ties, and introduce innovative technologies allowed it to avoid the consequences of US sanctions and strengthen its economy. Against the backdrop of growing economic instability in the US, Canada strengthened its position and became a strong player on the international stage. It is quite symbolic that in response to the sharp decline in trade between the US and Canada, Canada has managed to find new partnerships and establish long-term economic ties with other countries, allowing it to minimize losses and strengthen its role in the global economy. The situation unfolding against the backdrop of the trade war between the US and Canada has had unpredictable consequences for both countries, but Canada has not only survived but also significantly strengthened its position on the international stage. This happened against a backdrop of growing global tensions, when the country, which seemed to be facing economic losses, began to actively develop in new areas. The economic consequences for the US became apparent quite quickly. Exports to Canada declined, and losses in agriculture and the energy market were significant. With rising tariffs and new sanctions, the US found itself in a situation where the previously stable Canadian market became less accessible. Many farmers and distributors who had previously relied on the Canadian market began to suffer from a sharp drop in demand. For example, Canadian buyers, who had previously been an important part of the market for US manufacturers, began to look for alternatives in other countries, such as Japan, South Korea, and India. By the end of 2024, it was clear that this trend would only intensify as more companies, including semiconductor manufacturers and major automakers, revised their strategic plans. For example, Ford announced that due to the tariff increase, it plans to move a significant part of its production capacity to Mexico and Europe to avoid high duties on the Canadian market. This statement sparked a storm of protests within the US, where the need to review the tariff policy was discussed. Despite external pressure, Canada began to reap the rewards of its economic measures. Its GDP grew by 2.6% in 2024 as a result of diversifying trade links and attracting foreign investment, thanks to higher taxes on energy resources from the US and an active search for new partners. Canadian companies were able to significantly improve their profitability. For example, Energy Corp, a major player in the renewable energy market, signed large contracts with European countries during this period, which not only offset losses from reduced supplies to the US, but also increased profits by 18%. This decision allowed Canada not only to reduce its dependence on US energy resources, but also to strengthen its position as an important player in the global energy market. At the same time, the US began to feel the effects of the economic downturn. A significant reduction in trade with Canada led to job losses in industries such as automotive manufacturing, agriculture, and oil processing. This situation also had a significant impact on distributors who had previously relied on the stable Canadian market. For example, US Agricorp, a major agricultural producer, said it would lose up to 15% of its profits in 2025 due to lower exports to Canada. This also meant that a lot of farms in the US had a hard time selling their stuff. The process seemed to start with simple tariffs, but within a few months it became a catalyst for deeper changes in the US economy.